Good morning, everyone. Thank you all for being here at the 2021 Multicoin Summit. And thank you to Tushar for kicking off the morning. So, as Tushar just mentioned, we've been thinking a lot about what's going to happen over the next 12, 24 months, and what's going to be really, really important, and where we should spend our time and energy, and how we should focus. And we've concluded that the most important thing is probably going to be composability. And so we're going to be really focusing in on that as a firm, and that's what we're going to be talking about today. So let's jump in. If you've been following crypto in the last few years, you've probably seen a slide that looks something like this. People have been talking about the need to scale blockchains for quite some time. Since the advent of Bitcoin in 2009, it's been known that these things, at least in their current forms, don't really scale very well. This problem has been really heightened and exacerbated in the last year or two as gas fees have become pretty bad. We certainly have participated in this conversation and have been talking about the need for increasing throughput and scale. But what I want to highlight today is that throughput alone is actually not enough. You need throughput and you need the ability to compose these things together. Doing 1 million transactions per second on some arbitrary database is actually not that interesting. Visa can go up to 1 million transactions in a second. NASDAQ and NYSE do it every day for trading equities and such. What it matters is being able to do a large amount of throughput in these systems and be able to have them all be natively composable with one another and to allow users to engage in all kinds of new social and financial interactions on an open, public, permissionless system. We're going to be talking a lot about composability, and so it's probably important to have a working definition for the day. Our good friend Jesse Walden over at Variant has proposed what we think is the most concise and eloquent definition, and that is a platform is composable if its existing resources can be used as building blocks and programmed into higher order applications. I'm going to use this term a fair bit today, so just keep that in mind as we talk about composability. Before we jump into the future, I want to go backwards in the past at least a little bit. 2.5 years ago at the Spring 2019 Multicoin Summit, we introduced the idea of what we called the modularization of financial primitives. That was a really clunky way of saying the word composability. The visualization you see here is actually a slide taken directly from that presentation. The point of the slide that we highlighted in spring of 19 was, in this case, you could take the DAI stablecoin out of the MakerDAO system. You could use it as collateral in a prediction market system, and you could trade those prediction market outcomes using something like 0x. The point of what we were highlighting is that these three systems do not know about each other. And yet, the three of them, by combining the three of them together, you can produce something that is more useful than any of the three of them individually. You get this kind of emergent value that emerges from composing into higher order applications. 18 months ago, DeFi took off, and in the last 18 months, it's a lot of people in finance, in Wall Street, and trading, investing around the world have looked at DeFi and have said this thing is probably going to change a lot of the plumbing and rails of finance around the world. And composability has been a big part of the reason a lot of people have come to that conclusion. It's been 18 months, and we think we are right now on the cusp of what's going to be the next major kind of eye-opening moment of the power of composability in these public permissionless crypto systems. So I will posit you all with this. Over the next 12 months, the next generation applications that emerge are going to leverage a multitude of composable crypto primitives, and they're going to deliver experiences that were not possible before. Composability is at the center of everything we're thinking about right now and how we're allocating and investing, and we think it's going to become increasingly important over the next 12 months, and we're going to lean into it as hard as we can. A really good visual metaphor for understanding composability is Legos. A lot of people in the crypto community over the last year or two have talked about the idea of money Legos or DeFi Legos, and it is a pretty apt analogy. But composability is actually about more than just Legos. NFTs are Legos, yield tokens are Legos, synthetic assets are Legos, in-game assets are Legos, social tokens are Legos. There's going to be a whole bunch of these different kind of Legos, and we think the next generation of apps are going to be Lego castles that are built on top of Solana. For the remainder of this presentation, I'm going to break it down into 3 parts. In the first, we're going to talk about the state of the Solana network. If you're going to build these Lego castles, you're going to need a base level of infrastructure and ecosystem that can support all of that. So we'll talk about the state of the ecosystem so you understand how and why it's ready to support these crypto castles. Second, we'll dive into some of these composable crypto primitives and outline how some of them work and help you understand how you can put them together. And then we'll conclude the presentation by dreaming and imagining a little bit and peering into the future and thinking about what some of these next generation apps are going to look like. I also want to highlight and say it's important to understand why we think Solana is the substrate that's going to make all of this possible. And to understand that, I think you actually have to look at Ethereum today. Ethereum has become what it's become over the last 5 years because it makes it really easy for developers to build apps that compose with each other. And that is possible because they all live on a single shard and a single layer 1. We think Solana builds on this core insight that Ethereum pioneered, but it provides a very elegant way to scale while still maintaining composability in these systems. Over the last 18 months, Solana has grown from being basically nothing to being a top 5 asset in crypto. And today there are thousands of developers, people building all kinds of apps all over the world. So let's start to look at the state of this network. In our opinion, the most important thing to think about when evaluating any of these systems is the developers who are building on top of them. It is a forward-facing number as opposed to a backwards-facing one in terms of kind of implications, and it's the one we spend the most time thinking about. Over the last year, we can see developer growth in Solana has been growing nice and steadily. I want to highlight what the y-axis is in particular on this chart. There's a lot of ways to count developers. We tried to use what we think is kind of the highest and most rigorous bar for doing that. The y-axis here is showing you the number of unique GitHub accounts that are making commits to Solana-affiliated repos. This number is also a little bit out of date, so I think it's probably closer to 2,000 now than 1,800. Next, I want to talk about hackathons. Most people, when they think about hackathons, think they're kind of silly, fun weekend project things. Some developers get together, eat some chips, drink some Mountain Dew, and code all night. And at the end of the weekend, they typically, are kind of done with whatever it is they were working on. In crypto, at least in the case of the Solana ecosystem specifically, the opposite is really the case. Over the last 12 months, the Solana Foundation has hosted 4 public hackathons, and you can see the number of submissions to each of those has been growing. But what's more important is what's been coming out of those. We have funded 7 teams that were born out of these hackathons, including Mango and Saber, which are 2 of the largest Solana-based DeFi protocols today. In addition to those 7 that we have funded, dozens of other teams have raised money from other venture firms coming out of these hackathons. I think it's really important to note that the way in which these teams are being born, it's not they're chasing liquidity mining incentives. They are actually building things at hackathons. People are observing them, and then they're blooming into full-blown protocols, companies, and teams. Next, I want to talk about wallets. Phantom is the flagship browser wallet for Solana today. It did not exist 6 months ago. Today, they're crossing 1.5 million active users. Those are, I believe, weekly actives. Phantom has exploded in popularity for a couple of reasons. First, there's a lot of developers building stuff, and if people want to interact with those apps, they need to use Phantom, and so Phantom has been a very natural beneficiary of that growth. But secondly, Phantom is just amazing. It is the best browser wallet out there, and people all over the internet, on Twitter, Reddit, and a lot of other forums continue to rave about it. As someone who's interacted with basically all of these things, it is far and away my favorite, and I think that's general consensus among most out there. Let's talk about NFTs here quickly. Metaplex is the NFT standard on Solana. It was launched about 6 months ago. In that time, creators and developers have issued 2.3 million NFTs, and they're growing at an exponential rate. Metaplex's code base is completely open and permissionless, and it has already been forked thousands of times by teams building new kinds of NFT projects and protocols. Today, people on the Solana blockchain are trading tens of millions of dollars of NFTs every day. But what's actually more interesting and a little bit less well known is that the NFT marketplaces that are hosting this trading are today generating an aggregate of more than $100 million in annualized run rate. Those businesses did not exist 4 months ago. It's one of the fastest growth stories in crypto that almost no one is paying attention to. Next, stablecoins. As Tushar highlighted before, they are paramount for the growth of the ecosystem, and I hope one day to never send a bank wire again, to only use stablecoins. Stablecoins have been growing steadily on Solana over the last year. USDT and USDC are the flagship stablecoins today, and there's about 4.5 billion of them on Solana. The other really important thing about stablecoins is fiat on-ramps and off-ramps. It doesn't really matter how many stablecoins you have on your blockchain if people can't get access to them easily. All of these exchanges today act as the way to get your money from the old system to the new one, and you need all of the major exchanges to support Solana for it to really fulfill its vision. All of these exchanges today support both deposits and withdrawals for USDT and USDC on Solana. These exchanges today comprise more than 90% of trading volume on spot and derivatives around the world. So the vast majority is covered, and I expect the last few will get there in the next month or two or three. Let's talk about investments in the Solana ecosystem. In 2020, I think there was one team that raised money to build on Solana, and that was Serum. In 2021, teams have raised $2 billion to build on Solana. I think the really important thing to understand about this number is that despite the fact that Multicoin was the largest investor in Sol before the token launched in April of last year, Multicoin represents just 100 million of this 2 billion, and so we are just 5% of the total ecosystem investment here. Today, every major trading firm, hedge fund, crypto venture firm, and generalist venture firm that's serious about crypto is investing in the Solana ecosystem. And then let's talk briefly about DeFi and liquidity. The most commonly cited metric when comparing various DeFi protocols and comparing chains is a metric called total value locked, or TVL. Today, there's about 15 billion in TVL on Solana across more than 30 different protocols. The protocols on the right side of this screen here are those that have more than 500 million in assets. I think a lot of these are a lot less well known than their counterparts elsewhere, and it's important to highlight some of these names that are really pushing the boundaries here. All right, so to recap, we just looked at the state of the Solana network. Today, there are developers, more of them, learning how to build on this thing every day. VCs are investing. You have DeFi liquidity. You have wallets. You have stablecoins. You have NFTs. All the kind of core pieces are there. Next, we will talk about these composable crypto primitives. And I want to dive into some examples of what these things are and how they work. Here are just some of the DeFi protocols that are live on Solana today. I realize this slide is pretty dense, and there are a lot of logos here. Don't worry, we are not going to talk about all of them. The point of highlighting these is that you all can see just how many different types of Lego building blocks there are, and to understand that all of these things can be composed together in various ways. We're going to jump into a few of these little sectors to explain what they are. We will start with the most important primitive that underlies all of financial markets, and that is the central limit order book, or CLOB for short. This is the most important primitive in finance because it is what enables price discovery. It's how we know what things are worth. Since Anatoly and Raj founded Solana back in late 17, early 18 timeframe, the vision has always been to support an order book on a decentralized global network. Right after the network launched last summer, the teams at Serum discovered Solana, and they said this provides the substrate on which we can build a public global order book system. And that's what they built. Serum is not an application. Serum is a framework. It makes it possible to support an order book, to have limit buys and limit sells, and other more advanced order types, but those two mainly, for any arbitrary Solana-based asset. And that means if you can represent a derivative, a futures contract, an option, an interest rate, a social token, anything you can represent as a token can be traded via an order book on Serum. We think this is super important, and today there's actually a whole ecosystem, probably half, maybe 2/3 of the DeFi protocols building on Solana today are building on Serum, leveraging that open order book infrastructure. Obviously, the base use case here is trading SOL for USDC, but the other kind of use case I want to highlight briefly here is BetDex. BetDex is one of those teams building on top of Serum, and BetDex is a protocol for decentralized sports betting. We'll talk a little bit more about that one in a few minutes here. The other, again, key thing to note, Serum does not have a front end. There are a lot of other front ends that tap into it, Mango and Radium probably being the two most well-known right now. Next, we'll talk briefly about borrow-lend, real quick. Borrow-lend is one of the most important primitives in all of financial markets. People need access to credit and borrowing and leverage. This is certainly no different in DeFi today. 3 of the top 5 protocols by TVL are borrow-lend protocols, and they comprise about 40 billion or so in assets. Some of the most notable ones building on Solana are Oxygen, Jet, Port, and Apricot. Next, let's talk about derivatives for a little bit here. Derivatives are probably one of the most important primitives in finance and where we spend a lot of our time thinking about DeFi. Over the last few years, perpetual contracts have come to dominate crypto trading. On most days, perpetual contracts trade 5 to 10x volumes of spot. People love trading perpetual contracts because they're widely available, they concentrate liquidity, and they provide a lot of leverage. We think over the next decade, every major asset across every major asset class is going to trade in size on perpetual contracts on something like Solana and Serum. Solana in particular is important as the substrate that powers these derivatives contracts. If you have derivatives, that means you have leverage. If you have leverage, that means you can get blown out and become insolvent. The way to prevent that is you need to make sure that the system is updating fairly frequently, and you need to make sure that you can process a lot of transactions when the market moves and gets really volatile. This is why we think all of the best-in-class teams around the world today are building on Solana. Solana today is propagating blocks at about every 400 milliseconds or so, and the Solana team is aiming to get that down to 200, maybe 250 over the next 2 or 3 years. For some context there, the speed of light to go around the circumference of the Earth is about 120 milliseconds. So we're pushing up against the limits of physics here. Over the last few years, FTX in particular has exploded in popularity because it provides the best venue to trade various derivatives contracts, spot contracts, dated futures, and more. And it works so well because everything naturally cross-margins against all of the other pieces in there. Today, there are a handful of teams racing to build what we like to call decentralized FTX on top of Solana. The notable ones here are Mango, Bonfida, Drift, and O1 Protocol. Again, I want to highlight these derivatives contracts because when we get into some of these future-facing composable applications, we're going to be using derivatives as the primary backbone to create a new kind of stablecoin and a new kind of prime brokerage. So keep these in mind. All right, we've got 3 or 4 more building blocks to go. NFTs and social. Creators, I think we are going to use NFTs to unlock all kinds of new ways to engage with their fans and with around the world. To understand why that's important, let's think about how fans engage with creators today across all of the various channels online. You've got YouTube, TikTok, Instagram, Twitch, etc. Creators do all this hard work. They create content, they publish it, people start watching it, and the experience kind of sucks for both fans and for creators. For fans, you're scrolling through a feed or you're watching a video and you get an ad, kind of sucks. If you're a creator, those ads obviously kind of ruin the flow of the app and the content, but more importantly, they just don't let you actually interact with your fans in an individualized way. We think these NFT and social protocols are going to facilitate solving those problems. First, there's Metaplex as a base primitive. As I highlighted earlier, Metaplex is the NFT standard for Solana. It provides a really easy way to create NFTs, issue them, trade them. It also makes it really easy to have a marketplace where you can have people posting prices for buys and sells. It can enforce resale restrictions. It can enforce royalties on resales, all kinds of other tools that creators may want to use. It's already been forked thousands of times, and today is becoming the standard there. The other protocol I want to highlight here is Strata. Strata is a protocol that makes it really easy to create and issue a social token for a person or for a community or collective. In about 2 or 3 clicks using Strata, you can create a token, and you can tie that token to a Twitter account or an Instagram account, or in the near future, you'll be able to hook it up to a channel in Discord or Satellite or some other chat app. Today, social tokens are pretty nebulous and murky, and they are probably where NFTs were 18 or 24 months ago. So it's still a little fuzzy how people are going to use them. But if you look at the early experiments happening today, what you see people doing are creating token-gated communities. So you have to own my token to chat with me, and you can have different tiers of that. And you're doing people to do access to paywalled content and access to like NFT drops and concert tickets and those things. We think by having these 2 things together and hooking them up, you're going to unlock a bunch of cool new experiments. I also want to highlight Audius here. Audius is a protocol for streaming and an application for listening to music hosted in a permissionless crypto Web3 environment. Over the last 2.5 years, Audius has grown to about 6 million or so monthlies. Historically, Audius has been a distribution channel, an alternative one relative to Spotify, Apple, or YouTube. They are about to launch a bunch of cool things around NFTs and creator monetization. Ronil Rumberg, who is one of the founders of Audius, will be coming up right after this to talk more about what they're doing. I also want to highlight Dialect here. I think Dialect is one of the coolest and most interesting things we've seen in a while. Dialect enables push notifications based on on-chain activity. the first thing people typically think about when they think about this is messaging, and they think about like a Telegram or a WhatsApp or Signal or iMessage or something. That is not the right use case here. What's really interesting about these blockchains is you have a public key or an address. You start doing stuff with it over time. That's public, and that you now have public data about what you have done, what you've liked, what you haven't liked, what you've borrowed, et cetera. There's going to be, as more and more data is out there, you build kind of like an on-chain resume or credentialing system, and a lot of people may want to send you messages based on that. The most simple example of this would be, let's say there is a DAO out there that manages borrowing and lending of assets. As that DAO approves new assets to come onto the platform, they may want to send a message to all of their existing borrowers and lenders and say, hey guys, we have added support for a new asset. You want to come please deposit it? This concept will work in many-to-one configurations, many-to-many, and one-to-many. And we're really, really excited to see people bundle your on-chain activity with social and messaging type of use cases. Last primitive here is Satellite. Satellite is a crypto-native Discord. It obviously supports the things you'd expect: chat, group chat, audio, video, file sharing, those things. But what they're really going to lean into is embedding crypto in it in a bunch of really interesting ways. The design space here is pretty vast of what you can do, and I'll give you just a couple of quick examples. You can imagine if you're in a chat room and you type in $SOL and hit enter, that the system will add a little buy and sell button next to your message. Since Satellite is built on Solana, you could have your wallet hooked up in the app, and when you click that buy or sell button, you will send an order to the open global Serum order books and be able to buy or sell the asset right in line. This, of course, can work on the flip side as well for gating access to different communities out there. All right, so I'm going to pause and recap where we are. I know we've covered a lot of ground. So far, we've talked about the state of the Solana network and some of these primitives that are here. What's great is all of this stuff is live or going live in the next few weeks, and so we have this primordial soup of composable crypto primitives that's there. Earlier in the presentation, I made a couple of very specific claims. One is that these next generation applications are going to take off in the next 12 months. I think timing is really important here. This stuff doesn't work until you have the ecosystem support and until the primitives are there. And all of that stuff has just started to come to be ready to go in the last few months. And so that's why we think the time is now. The second claim I made was that these new apps were going to enable experiences that were not possible before. And so let's explore some of those examples. I'll do 5 examples total. 2 will be DeFi-centric, and 3 of them will be consumer-facing. So the first will be a new kind of stablecoin called UXD. UXD is a stablecoin that has 3 really important properties. The first is that it is capital efficient. Second, it's decentralized. And the third is that it is stable. In order to create UXD, you need 2 things. You need a spot system where you can buy and sell spot assets, and you need a futures exchange where you can go long and short using futures contracts. To create a UXD, let's say you take 1 SOL as you go long that spot, and then you go short 1 SOL on a perpetual contract or dated future, and those combined positions are always worth $1 because they are perfectly hedged. As one goes up, the other goes down in exactly the same value. What's really interesting about UXD is that this stablecoin construction has been known for a really long time. There have been hundreds of trillions of dollars that have traded through this construction on centralized exchanges like Binance and FTX and others. And so everyone who's been trading has understood the system works. Despite that fact, no one has built it in the last 3 years, right up until now. And the reason that the timing is so interesting here is that Mango, Drift, O1, and the other teams building derivatives have all just started to launch their derivatives exchanges in the last few months on Solana. The UXD team realized this about 4 or 5 months ago when they wanted to get started, and they said, these exchanges are coming online. We can start building this now. And they actually started building even before those exchanges were ready, and they're now just hooking into those derivatives exchanges. What's so cool is that you just couldn't do this before. In order for this to work, you need to have a spot system. You need to have a future system. Those 2 things need to be able to coordinate with each other and compose with each other. And you need the output of the system itself to also be composable. UXD is a composable crypto primitive, and that means you can take UXD and use it in any other app or even as collateral in another derivatives exchange. That's why these things are so cool, is they can just mix and match in all kinds of new ways. The second DeFi example we'll talk about is a DeFi-Native prime brokerage. To understand what this means, let's think about traditional markets here for a second. Today, there are a lot of hedge funds and traders around the world who trade a bunch of asset classes: equities, commodities, FX. They're trading across around the world, NYSE, NASDAQ, London, CME. The big primes today that serve traditional markets provide three major functions to these hedge funds. First, they connect to all of the exchanges so that each firm and fund doesn't have to. Second is they provide leverage. A lot of funds are trading positions long and short, and those are offsetting. The only way to produce decent returns if you're going to be doing a lot of hedge to trading is with leverage, and so the banks provide that. But the third thing they provide, and this is probably the most important, is they cross-margin all the positions. And so as the value of your assets on one venue go up or down, that acts as collateral on the other venues, even though the collateral is not actually there. The big banks that do this today, JP Morgan, Goldman, Morgan Stanley, and a lot of others, they have huge balance sheets and they have tons of clients. And so by aggregating all of that capital and distributing it across all of the exchanges, they make it really easy to trade in a very capital and tax efficient way across all of these venues. If you think about how would you do that in a DeFi-centric way, the answer is actually pretty clear. It's just composability, and that's exactly what MarginFi does. MarginFi is a new system that layers into all of the various derivatives exchanges. Some of these are named here: Mango, Drift, Tango, and others. And it lets you naturally hook into all of them. You can cross-margin all those positions, and anyone who wants to lend into the system to earn yield can lend straight into it as a third party. This is one of those things that, again, everyone who's been trading assets on Wall Street or in crypto has understood needs to exist. It hasn't been possible to build it before. Despite the fact that a lot of these derivatives protocols are very young, most of them are born in the last few months, there's already teams building out this infrastructure because they understand that this is what is going to be expected. This is going to be table stakes in 12 months. And all of that plumbing is coming into place right now. I also really love MarginFi as an example because it is the quintessential example of composability in DeFi. The entire point of the system is you just have to hook into everything and make it all work magically together. And that's why we love this example, and we love seeing it on Solana today. All right, so those were our DeFi examples. Now we're going to get into some consumer stuff. The first we're going to get into is sports betting. Today, sports betting is a destination. You go to FanDuel's or DraftKings, or maybe you call your bookie to place a bet. Because BetDex is built on Serum, and it is therefore a global, open, permissionless order book system, we think you're going to be able to embed sports betting into all kinds of applications around the internet. So let's just imagine what something could look like that's going to get built here in the next year or two. There's a lot of athletes out there. A lot of them are retired. Maybe they don't make the playoffs. They're bored. Let's take, for example, Johnny Manziel. He's a pretty young guy, very wealthy, very well known. I can totally see a world in the not too distant future where he says, hey guys, buy 10 of my Manziel coin. You can join my satellite channel, and we can all trash talk each other in there. And we can also obviously place bets on who's going to score the next goal, who's going to win the playoffs, whatever people want to bet on. Because you can naturally in satellite just type $ and something, and you can have that trigger a buy or sell action. You can imagine people just typing $ MIA, and that triggers a buy or sell order on the Dolphins or something. We think this is going to be a new kind of social experience that combines social and money in betting in a way that wasn't possible before. Today, you have social stuff and you have money stuff, and those are two almost entirely separate apps. A lot of people in Web 2 have been trying to bridge those things in the last few years, but because crypto is such an open, easy to access API, we think the best-in-class experiences that combine social and finance and betting are going to be built on crypto rails. Next, I want to talk about targeted fan engagement for creators. Again, as I mentioned earlier, we think the combination of social tokens and NFTs is going to be a really powerful way for fans and creators to connect. Kevin Kelly wrote a really famous essay in 2008 called 1,000 True Fans. And the thesis of that essay was that creators only need 1,000 fans on the internet in order to sustain themselves and create a living for themselves. His essay was a little early, but it turns out to have been very prescient. In the last few years, millions of creators all across TikTok, Instagram, YouTube, and other channels are now sustaining themselves via their creative outlets online. And so I want to consider how you can kind of leverage these tools to help those people. I want to focus on music because Audius is with us and they'll be on stage shortly, but also because music is the most probably culturally important creative outlet and probably the least well monetized. So let's consider a musician who is going to do an NFT drop or sell concert tickets in 2 or 3 days. Today, the standard workflow you would engage in is you tweet and say, hey guys, concert coming in 2 or 3 days. Here's the website. In 2 or 3 days, a bunch of people click the link and hit the refresh button at the time and spam each other and try and get the tickets. Obviously, a lot of people write bots, and the bots really screw everything up, and there's a lot of scalping. So let's consider an alternative universe. The artist can say they have a social token out there. People listen to their stuff on Audius, and they can just send a message using dialect, and they can only send that message to people who have listened to 10 of their songs in the last 3 months. And they can say, hey guys, token drop coming. You can only access this if you have listened to 10 of my songs in the last 3 months. You immediately just killed almost all the bots and the scalpers because they probably didn't know that was coming, and now they can't access the system. But you can go even above and beyond that. Let's say there's 1 million people who qualify for that kind of base level of entry. A lot of creators and artists want to reward their superfans, and they want their superfans to feel special and have access. And so you could say, if you own $1,000 of my token, and you have listened to 10 of my songs 3 times each in the last 30 days, then you get access in the first hour. And you can set up these kinds of gating systems and provisions so that you can actually reward your highest and most engaged fans. This kind of a thing is only possible because the data is on open permissionless systems and because you can communicate with those fans over something like dialect and using Strata and Audius. What's really cool is that this is going to happen not just in music, it's going to happen in every creative outlet. Writing, images, videos, Instagram, TikTok, you name it. We're going to see people playing with all kinds of these experiments online. And I think a lot of this stuff will translate into the metaverse as well, which we'll talk about with Matt here in a little bit. The last example I want to talk about is the most interesting one, and that is the opportunity for a decentralized record label. So what does that mean? Let's take a step back and think about this. Record labels are in a lot of ways VCs. They invest in a bunch of risky startups, otherwise known as musicians, and some of them will be successful, and a lot of them won't be, and the winners obviously make that business work. There are 3 major record labels in the US today, and that means there are approximately 3 committees that decide which musicians get VC funding and which don't. If you think about this market setup, it's actually a pretty strange setup. Tech VC investing, people have talked about wisdom of the crowd for tech VC investing for a long time. I think most VCs, myself included, generally think that probably isn't a great way to do it because the best tech investments are controversial and contrarian and weird, and getting a market consensus on them in an early stage is pretty difficult. But if you think about music, the exact opposite is true. A musician only becomes big and famous and well-known if people like their music. And so wisdom of the crowds is like kind of a very natural way to think about the VC problem for music. There's a lot of people today who spend a lot of time on the internet, and they take a lot of passion and pride in discovering new music. They're the ones on Hype Machine, they're in the Reddit forums, they're on Audius, looking for new stuff, and they're the ones who share it with their friends, and that's a meaningful source of their identity, and they love it, and they're passionate about it. Those people today, if you imagine a world in which there are social tokens for artists, the behaviors of those people, they become the new museum curators, or they become the new music VCs in that model. They can say, oh my God, I discovered this new guy, he's amazing, I want to invest in him, buy their token. I'm going to then tell my friends about it, presumably they will love it, they will also probably invest in it as well, and you can create new kinds of viral feedback loops and distribution that wasn't possible before. If you take this a couple steps further, you can imagine a world in which you've got curators now who have developed a track record of the ones they bet on big and the ones they bet on, and some they got right, some they got wrong. Fast forward, you can actually see a world in which those guys band together and create kind of a new kind of VC, which is a group of curators, and they can say, hey, we all agree this new artist is going to be amazing. They can pool themselves together into a little DAO, and they can invest in that. All this activity is on chain, their address will be publicly known, and that means the moment they invest, the world at large will know. And that's going to just change the dynamics of discovery and curation in all kinds of creative outlets. The other really interesting thing here is the idea of the musician having a token themselves. That is a great form of marketing. When the price goes up or goes down, people write about it and talk about it. But the other thing crypto has really taught us is that when people own a token, they like to talk about it. They like to tell their friends that they own it. And introducing those dynamics into creative outlets and discovery is going to really change the ability for you to have 1,000 true fans on the internet. This last example I just went over for this music VC DAO, I think is the most compelling thing we've kind of contemplated internally in terms of just the sheer ambition of what it represents. It combines elements of DeFi, DAOs, NFTs, social tokens, and consumer-facing applications to produce a social phenomena that wasn't possible before. This isn't just an app. This is much bigger than that. It's a new mechanism for social coordination and capital formation. Crypto is an inherently social form of technology, and this use case, like this music VC DAO, really reflects that. As people spend an increasing percentage of their time online and in digital spaces, we think crypto is going to enable all kinds of new forms of social coordination and capital formation that couldn't exist. This music VC DAO is the one that's kind of closest to us, but there's going to be a lot more of these. I want to conclude by this presentation by saying what I said at the beginning, which is that over the next 12 months, we believe that next generation apps are going to leverage a multitude of composable crypto primitives to deliver next generation experiences that weren't possible before. We've been investing in Solana since 2018 and 19, before the network launch. Over the last year and a half in 2020 and 2021, we've been investing in these composable crypto primitives. Today, we think we are the best positioned firm in the world to take advantage of this next generation of apps that are going to leverage composability. And we're really, really excited about where this is all going to go. Thank you all.